Welcome to TheoTrade. This is Don Kaufman. You are watching the Theo Night video here for August 31st, 2016. We've got just about 6 minutes left in the trading day with the S&P futures down 6 handles and recovering quite substantially off their bottom today. So one of the things that I've talked about substantially in some of these recent videos, including this most recent weekend update, happens to be the ranges onto which we've actually traded in. So initially we established a range, okay, right in and around this 2160. Now what you're looking at here in terms of a chart, this is the last 30 days, okay, broken down to 1 hour. So what did you see over the last 30 days? Absolutely nothing, because the range has been that incredible, that tight. So to the downside of the range, we're sitting right around 2160. Okay, and because we're trading in such an incredibly tight range, and the upper range over here takes us right into the 2180. So the inflection being, well, pretty much where we're going to close today. I mean, you couldn't have scripted this any better coming into today's close, that we're right inside of this kind of key inflection point between, all right, literally in the seam of all the trade that's occurred inside of the last 30 days. Actually, this is even more than 30 days right now, although we're looking at a 30-day chart. We're now into pretty much our 6th week of not moving in the S&P futures. So again, what's occurring in this incredibly tight range, the longer we sit here, the more contract size accumulates. That's futures contract size, that's option contract size. The bottom line is there's a ton of risk out there. Well, in just the recent couple of trading days over here, we've actually breached the upper side of this, breached the lower side. Okay, today, once again, we started off the day right in the neighborhood we currently are. We actually fell to 2160. Now, 2160 happens to be unbelievable support at that particular level. The volume took off to the upside. Now, what that volume indicates in the S&P futures is there's tremendous hedging activity necessary, okay, at the 2160 level. The exact same thing is true, okay, as the other day we actually crested right to 2180. What did we see? Huge volume spikes running around the 2180 level. Now, if you want to take really a very specific look at this, okay, we can even come into kind of just look at a 1 minute clean chart, and you'll take a look at the bottom today. We couldn't be any more spot on with the levels that we're actually seeing in the market. And of course, the spikes in volume, over 10,000 contracts. You kidding me? That's all hands on decks. You know, every man, woman, and child for themselves when you're trading 10,000 contracts in a minute. And again, we're seeing volume consistently spike 2180, 2160. Again, that's where a huge amount of hedging activity persists. All right, so we're right back to 2170. It's like nothing happened over the last couple of days. And honestly, nothing did. But as the week progresses on, we're still displaying, okay, couple of signs of, all right, I think we're ready to finally crack the range. Why do I actually base this on, what am I basing on cracking the range over here? Well, coming down now, we've tested 2180. We've now tested 2160 a multitude of times in the last couple of trading sessions. Some of that risk is being hedged off over here. And we have a substantial report, obviously the job situation, the employment situation coming out this Friday. Now, one area to keep your eyes on with the employment situation. Again, we've got about 2 minutes left in the trading day. With the employment situation, I noticed an interesting pickup in terms of volatility once again in the financials. Now, if you're not watching the financials, okay, in the last few trading sessions, you're missing quite a bit. The financials have been actually making a move off the 24 level, kind of breaking out to the upside. Now, not much of a market technician over here. They ripped to the upside. Today, though, quite entertaining. If you looked at today's trade, you wouldn't know it. The financials dipped hard, but that's ultimately what led this rally. So, what the financials are throwing off right now, all kinds of signs of volatility. Again, I am not basing this at all on the trade or the chart. What I'm basing the financials throwing off signs of volatility is purely based on the option marketplace of the financials right here, right now. What you're looking at is the XLF. Over the next 2 days, the expected move, okay, the expected move happens to be approximately 36 cents. Now, does that scream risk to you? Well, maybe not necessarily, okay? But in just the last few days, this volatility has picked up an inordinate amount. Once again, the financials are where most of the order flow was being driven by today. That is, the S&P 500 itself, okay, was being dictated to by ultimately what was going on inside of the financial products. So how do I know that the volatility really picked up in here? Sure, you can look at the volatility number, but there's something more interesting that I picked up on, and that is this is with 2 days remaining. Okay, what's remaining? Well, we have obviously Thursday. All right, today is all over in about 40 seconds. So we have Thursday's trade, we have Friday's trade. Again, Friday happens to be the employment situation, the jobs report. Now, I looked back earlier in the week. All right, what's earlier in the week? Well, what I'm doing here is I'm in Think Back. Today obviously is what? Well, here's the live quote. Today is Wednesday. I looked back, okay, for example, to what? Here we are at the previous day. This happens to be on the 30th. This is yesterday's close, and even the 29th. Okay? You're looking at the exact same options that we were looking at a moment ago. But this had 4 trading days remaining. Okay? There's the bell. With 4 trading days remaining, what was the expected move? What? Approximately 35 cents. Now, you fast forward. Literally, that was, again, 2 days ago. You fast forward, we have 2 days left. The expected move has actually increased. So instead of options decaying over the last 2 days, options have actually increased in value. Again, displaying a dramatically more risk that's being brought into the XLF in recent days. So I started digging a little bit deeper in here, and I noticed, again, 300,000 contracts of puts traded today inside of the XLF. How do I describe that? Well, listen, there's a lot of different ways. I looked for dividend plays, I looked for everything, but there's a lot of different ways that puts can trade. Could somebody going out there buying puts just because they think the market's going to go down? Sure, but they could also be buying puts to hedge. Okay? In effect, you could even technically have somebody out there selling puts. They could be selling puts, could theoretically be a bullish position. Any way you want to look at this, this is an inordinate, all right, and wild number of puts that are trading in the XLF right now. And it just so happens that the volatility is increasing. So what does it tell me? It tells me whoever is trading these puts, they're a net buyer of them. So I can even go into what's called time and sales down here on thinkorswim, and I can look at individual trades. And right here, you can see that was one trade. Somebody went out there and they traded 132,000 puts, okay, as part of a spread. So now you start to dig in here even deeper and you go like, conditions, let's just look at all the different spread trades that are going on here. Was this a roll? What was it? I don't know, but it is ridiculously large volume. So again, as you start to cruise through here, you can find the trade. What they've actually traded is a spread. It's an OC, okay, October 21 expiration. It's a 22-24 spread. Now, my experience tells me that they were, again, a net buyer of this particular spread. A net buyer of the spread. Why does my experience tell me that? It's because volatility inside of the entire XLF marketplace increased. So as the volatility increased, sure enough, that probably indicates they were net buyers of options out there today inside of the XLF. Again, you can also see that this is an opening trade. How do I know it's an opening trade? Well, the volume far exceeds the open interest. Think about it. There's a monster trade going on right now inside of the XLF. It appears that they're a buyer of the 24-22 put spread, and that they did it roughly, 130,000 times. Again, some very, very large size in there. It is 51 days out. So is it right here, right now? Absolutely not. But I'd still be a little bit alarmed as to the size trading in the financials. Anytime I see size trading financials, get a little nervous, because you got to realize that 130,000 contracts, it's likely somebody in the financial world that's trading the financial world. So again, under option statistics here, off the charts, we're sizzling it. That's 12 times the normal, option volume on the trading day on the put side of things. So again, quite substantial out there in the XLF. Really, what we want to look for coming into Thursday, all right, not much. We're going to be watching this 2160 range, this 2180 range again. Friday, though, consider Friday, which is the employment situation, really a binary event. All right, I would expect that by the end of this week, we're going to solidly crack this particular range. We've been threatening the 2180, 2160. I'm telling you right now, based on everything that's in front of me, yes, I definitely, with my own positions, am leaning to more a bearish tone in the marketplace. However, I want to make this totally clear. There is nothing and no indication right now that when we break the range, it's going to be the downside. But you really have to consider, all right, how many times we've actually crested to these ranges over the last couple of days. Again, look for us to finally crack this range. All right, again, my expectations would be to the downside, but look for the 2180, 2160 range to be no more by Friday's close out there. We're going to be looking for that as the market is displaying a little bit more signs of volatility over the last few trading sessions. Thanks everybody for joining us here at TheoTrade. Be back on all this week in TheoTrade chat. Have a good night. Bye-bye.